The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, the chilly Tax Lady. But I got to tell you, I'm sitting here in the studio, and they got a TV going, and I'm watching the Weather Channel, and it's showing someplace else that's getting snow. And Chris Fabian's with me, and he says, as long as it's not snowing in Buffalo.
Hey,
right, Chris?
Yeah, they're not. The weather people are not in Buffalo. So that's
amen.
a good day.
They're in Bangor, Maine. Who cares, right?
That's right.
But it's lovely out. For those of you listening outside of the area, it's chilly, but it's sunny. That's good. It's chilly all the way to Florida.
Yeah.
I think it's like 38 degrees down in my neck of the woods down there. I mean, it's cold. Anyway, we certainly are going to help you with your taxes. I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And I will tell you, I just had a little sweet little girl that came in, did her return virtually, and I said, why don't you send me last year's return? People should not be left alone with W-2s and a computer because they don't know what they're doing. So I'm getting her back almost $2,000 from last year. She didn't know. She didn't know how to do it. And then I'll give you an example. The education credit, which should have been a credit, she ended up doing as a tuition and fees deduction on $4,000 worth of income or something like that.
Wouldn't even impact
it. Didn't have
it.
anything, So, I mean, just because people don't know. When you print it out, you think, well, there's an answer. It's the wrong answer, but it's an answer, right?
Yep.
Anyway, lots of people were starting to help. I would suggest if you're somebody that wants to use us, give us a jingle as soon as possible to get your appointment. We have on our website, we have 31 area offices. Some of the newer offices are only open 2 and 3 days a week, so we're trying to stockpile everybody in to make it efficient because we are having trouble staffing with clerical. We have great tax preparers, but the support staff has been kind of non-existent. The ladies we have and the gentlemen we have, I love them, but it has been really interesting.
Yep.
So, all right, wanted to talk about today, again, 8030930, 8030930, star 930 on a cell phone. I want to make sure that before I get off of this, if you're a homeowner, property tax payer in New York State, there is that new credit. We talked about it before, but it's an IT 229, and if you're paying more than 6% of your property taxes in a home you live in, then you should look at that, 6% of your adjusted gross income for New York State. You should take a look at that because the credit can run anywhere from $250 to $350 over and above your star.
Right.
So it's a lot of money.
And we were talking too. It's really, it's a great credit. It's a nice thing they're doing. But if you fall in between 0 and 250,
you get nothing. Nothing. Right.
So how is that fair? But
well, hey, all right. Well, we know how that goes. Yeah. We wanted to talk about we try to let you know how things work. The category of income you have is all taxed differently. So your wages, your interest, your unemployment, your employee bonuses, pensions, non-qualified dividends, those are all taxed at a regular tax rate. So if you're in the 20% bracket, that's where that would fall. However, other forms of income are taxed differently and usually at a lower rate.
Right.
So that's why it's really, really important that you pay attention to where you put your income in. Some people just put it in as miscellaneous income, and really, like for instance, if it's rental property or if it's Schedule C, they should really use that schedule to reduce it by the expenses to reduce their overall tax liability.
Right.
Yep. Okay, let's go to the phones. I'm Esther Gulius, the tax lady, and we're going to talk to Jim. Hey, Jim, how can we help you, sir?
Yeah, hi. I don't know if you can answer this type of question, but I tried to file on Free File, through the IRS for the first time, and I got a notice. They rejected it, and it said the issue is the business rule IND 113. If capital distribution D is checked in the return, then Schedule D must not be present. However, it should be present because I had,
But it could be that for free file, they don't let you do anything that's complicated. And so if you have a Schedule D, that's a more complicated return, and that could be the reason they're not allowing it to go. So if you want to call our office at 632-7886, you can ask for Tony, and she can get you to send over a copy because we're doing all kinds of things virtually anymore. So you can send over through our portal a copy of the return, and we'll tell you what's wrong with it.
Okay.
Okay?
How about if I made an appointment and just stopped at an office?
That works
With
too.
that too? That works.
Yeah, I think I'd rather do that.
All right, Jim. Hey, thanks for calling.
Very much.
Bye-bye. Yeah, because a lot of these free file things, they're basically like, you got a W-2, put it in. But, it's not that easy anymore, because if you got a W-2 and you put it in and you don't do the earned income credit, you have just shot yourself in the foot.
Right.
I had a gentleman in yesterday, and he's gotten an earned income credit before, but it was more like $200. This year, it was like $1,100. And he said, why is the difference? Because they expanded it.
Yep. I mean, they're giving away money and they don't care. And
by gosh, you should stand. If you got it coming, you may as well take it, right? You'd be a fool not to take it.
Yep.
But, yeah, it's just like I feel like I'm on the Bank of Buffalo.
Yeah, I mean, I know I had a client today. They had 5 kids. So
they must have been happy.
the rest of their child tax credit was $8,000. Mm-hmm. I said, now next year you're going to get $16,000.
Yeah.
And they just were like, what?
Yep. Well, because they already got 8
right,
up front.
Right. But
yep.
they didn't, and they both work. So I said, yeah, but if you didn't work, you would still get this $16,000.
Yep.
And they go, how is that even possible?
Yep.
I mean, it's mind-blowing with what they're doing.
Yep. It's true. I remember people used to call and say, how much am I going to owe? Now they go, how much am I going to get?
Yeah.
All right, I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on a cell phone. We're going to take a short break. We'll be back with Ken, Maura, and your calls on the other side.
We are family. I got all my sisters with me. We are
To us, you are family, and family takes care of family, and that's what we want to do for you. I'm Esther Gulius, the tax lady from EG Tax. We got all of our offices are open, and there are more twists and turns and ways you should look at your taxes that you just cannot believe this year. And we want to make sure that you don't overpay. So we want to go to the phones, and we're going to talk to Mr. Ken. Hi, Mr. Ken. How can we help you?
Oh, hi, Esther. Hi, Chris. It's Ken from the IRS. I used to work for you.
Oh, we love you, Ken.
Your job is still waiting for
Yes, we would love you to come back. Can we pick you up?
I'm helping out some friends and family. I got one of these deals where we got the custodial, non-custodial parent. And,
Yep.
And every other year, one
Yep.
of those deals.
Yep.
And this non-custodial parent is only going to get a $500 credit for other dependents because he's not the custodial parent. The child doesn't live with him.
How
No.
old is the child?
10 years old.
No, they get the full child tax credit.
Because I ran it through our software, and it's saying they only get $500.
No, they get the full. They get the whole full 3,600. Maybe if you come back to work for us, we'll help you.
But in
no.
the meantime,
You must be entering something incorrectly. Now you're not talking about the stimulus, and you're not nothing like that.
no. But it's interesting because the custodial parent got $1,500 during the year that they probably shouldn't have gotten
You mean for the advance?
for the advance.
Right. They're actually going to forgive that if the custodial parent now is not going to claim the child, if they got it and they weren't entitled to it and their income is under, what is it, 40?
40,000.
They don't have to pay it back.
Yeah, they do qualify for the safe harbors.
Yeah.
They get that. Plus the fact they got the $1,400 during the year.
Mm-hmm.
There's no provision to give that back either.
Yep. But they should get the 36. Well, they wouldn't get the 3,600 because
He's 10. He'll
he-
get.
yeah,
the
he'd get $3,000.
non-custodial should get a $3,000
Right.
credit.
right.
Right, but they got $1,500 that they really.
Right. Well, the 1,500 then comes off, so that'd be 1,500 is what they'd get.
Well, we'll run that through again.
Yeah. Give us a jingle, Ken. I'd love to see it.
Okay.
All right.
Well,
Thanks for calling.
I don't work for you, but I love the show.
Thank you, Ken. We love you too. Bye bye. He's a good guy.
Oh, still get people ask about him.
Yeah. Well,
He,
you say we don't know why he flew the coop. All right. We're gonna go back to the phones. We're gonna talk to Maura. Hi, Maura.
Hi. I have been doing a lot of telehealth appointments with my medical providers. I pay my co-payment, but because I'm not in the office with them, is there any other deduction I can use, like for my cell phone and the tablet that I see them on, or my internet connection?
Well, I mean, you would have had the tablet anyway. You would have had the internet anyway. So there was no extraordinary expense that you incurred, was there, Maura?
No, just the internet connection.
Which you would have done anyway, right?
Yeah.
So, I mean, had they said, Maura, we'd talk to you if you get this doodad and it's $150, then that would be a medical expense. But do you really use your do you really list your itemized deductions under medical? Do they exceed 7.5% of your adjusted gross income?
I'm going to have to because I had surgery in 2021, and I had the bill was rather large.
And you paid it.
And I had to pay it because the insurance didn't. So
Okay. Well, there's no deduction if you didn't incur any expense. So obviously your mileage would be deductible if you got in the car, if you drove around, if you had to pay for parking, that would be deductible. But if you didn't incur any expense, there's not going to be a deduction for it.
that's why I wanted to double check, because I know about the mileage and the parking.
Right.
I just didn't know with the new.
And of course, you got your co-pays and your prescriptions and nurses and ambulances and all that kind of stuff, right?
Trust me, I
Doctors, dentists, glasses.
I go to you guys, and when I walk in a few months, they're going to be very look at me like, whoa, because I've itemized everything.
Well, good for you. I mean, bad for you, but good for you.
Well, it was eye surgery, but I was out of pocket expense. So
Yep. Okay, Maura. Thank you for calling.
no
right.
problem.
Thank you. Bye-bye. I'm Esther Goulias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And speaking of texts, we got some.
Right. We got today. I received an interest income letter from the IRS for $10.37. What is this from?
Well, obviously, they were late in sending you your money. And so because they were late in sending you your refund, they gave you money, or you did an amended return, and this is money that on your amended return that they are paying you. So you want to make sure that you claim it when you're doing your tax return under interest received and back it off on New York State because it's from the Treasury, so it's tax-free on New York State.
Right. And this could have been maybe they filed early before the unemployment change.
That's true.
So, and then they received that extra money, so the IRS gave them interest.
Right.
So, but it is taxable.
It is. And then what else we got? Is the $229 for just property taxes, not school taxes? It's for everything.
Right.
School and county.
School and county, village.
And silly city and all silly city
Yes.
and all that. Yeah, you lump it all together and you compare it against your adjusted gross income. If it exceeds 6%, then you qualify to do the worksheet. And then there's a 14% limitation that on the excess that you'd get back, and it's $250 to $350. So people that don't have to file, right? Normally, you'd want to file to get that because your AGI would be very low.
Yeah, I know there's some people that I've done already, and they go, yeah, I know I get nothing back from the state. I said, no, you're getting $350, and they like have a heart attack.
Right. And
What
so
did
that's
we
a good
do
thing.
wrong?
Right. All right, let's talk about how other forms. So we got regular taxes, then other categories of income in your tax return are taxed differently if you do the tax return correctly. And one of the big things is the Schedule D. So if you have sale of capital assets at a gain, then you should use the Schedule D worksheet, because if you use the Schedule D worksheet, then instead of paying at the rate that you pay regular taxes at, you pay at a much lower rate. You might pay at 0%
Right, for the federal.
for the federal, but the state doesn't cut you any slack.
No, not at all.
So if you are somebody you said to yourself, oh, I just don't want to do that worksheet, and you want to pay more taxes, then more power to you. But if you don't want to pay taxes on your qualified dividends,
Yep.
which is when you get your brokerage statement, it's going to say total dividends, qualified dividends, capital gains distributions. The capital gains and the qualified dividends are taxed at a lower rate. So when you say, oh, I got to pay capital gains, really be thankful, because capital gains are taxed at a lower rate.
Right. Like you said, for some people, it could be a savings of 12%. For the people in the 22% bracket up, it could be a savings from 7% to 20%. And then if you're in the highest tax bracket at 37, it brings it down to
20%.
So it's a
17%. So on $100,000, that's $17,000.
Right.
That's a lot of money
Right.
to do it wrong.
Yep.
Right? The other thing is, if you lose money when you sell a capital asset, that's handled differently too, right? So let's say that I had a piece of investment property and I bought it for $100,000, and I had a fire sale and I sold it for $80,000. Because it's a sale of a capital asset, I have a $20,000 loss, but they don't let me just take that loss, even though I incurred it this year. They make me offset it against other capital gains, and if I don't have capital gains to offset it against, I have to carry it forward at $3,000 a year.
Correct. Yep. So if you have the stock, sell the stock to offset that loss.
Right, and that would be what you do with tax planning,
Yep.
right? All right, what do we got here?
How many federal stimulus payments did the average taxpayer get in 2021? Well,
When 2021, there was just one.
Nope, there were two. There was the one in January, which we had to reconcile on the 2020 return.
Right,
It was
right,
a little
right.
confusing, the $600.
And then
in
14.
March, there was the $1,400 one.
Right.
So on your tax return this year, you have to reconcile the $1,400 stimulus per person.
If you didn't get it.
Right.
So explain what you mean by that, Chris. I mean, so reconcile. So what is people, they look at it and they go, reconcile. When do you, not everybody is going to use the reconciliation.
Well, you should always use the reconciliation.
Well,
even-
there's that form to fill out.
Right,
But,
the worksheet
But I
eight.
mean, not everybody's
But
going to get benefit.
Not everybody's going to get more. But say last year you were married and your income was $175,000. You didn't get it. But now your income this year is $130,000. Well, now you qualify, so you would get, if it's the only two of you, $1,400 apiece times two, you would get a refundable credit of $2,800.
Okay, and that's because last year they cut it off, right?
Yep.
At $150,000 to $160,000.
Correct.
Right? So if your income was over that $160,000, you got nothing. And so this year you get another bite at the apple because your income went under that threshold,
Yes.
right?
Yep.
And that's what the reconciliation form is for. And in that situation, on a married couple, they'd get 14 and 14.
Right. Or if you just had a baby, you just adopted a child, you would get the new $1,400 for that person
Okay.
as well.
Good job. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And what do you got, a long text here?
Nope, this one. Hi, guys. Regarding earned income tax credit, I am single, get $12,000 in Social Security, unemployment of $10,000. Do I qualify?
No, there's no wages.
Well,
Oh, you could use 2019. So you got to go back and look at 2019 and look and see if you had any wages in 2019 that were low enough that you would qualify for the earned income credit. So maybe.
Right.
Right?
So you really got to look at it. Then we do have a long one. Let's see. We have Esther. I live in Florida, and to be honest with you, because I'm a 1099, I don't really recall collecting any unemployment for the first couple weeks of January 2021. But I got a email from the IRS telling me to go check in and pull up the form.
It was not from the IRS. It was from New York State.
Yeah, if you got a letter from somebody, it would be from New York State
Right.
saying you didn't claim it all.
Well, it took me a while, but I got through, right?
Yeah.
And it does not show anything for me. So why did I get the letter? Probably it was just a blanket email that they sent out to everybody that was in the system. If he looked and there was nothing.
Well, what there are a lot of people who did unemployment fraud. So if there is a letter from New York State, you have to, there's a website you go to and you got to fill it out. And then it submits a claim saying there's fraudulent unemployment. Then unemployment would send you out a corrected 1099-G.
But he's saying there's nothing.
Well, that's what I'm saying.
Oh, okay.
So, but unemployment has him having something. So,
No, I thought he said there was nothing.
right, but yeah.
Well, all
But-
right, whatever. Let's not have a fist fight about it. All right, Chris.
Yeah.
Well, anyway,
So follow the form.
Yeah.
You can go to the
and
New
if
York
you
State
need us to,
website for
if you
fraud.
need to talk to us, call us at 632-7886. Okay, we're going to take a short break. I'm Esther Gilius, the tax lady. 8030930, 8030930, star 930 on a cell phone. We'll be back with your stuff on the other side.
We are family. I got all my sisters with me.
Hey, I'm Esther Gilius, the tax lady. And we're talking taxes. I wanted to clarify what Chris was saying because I wanted to make sure everybody understood. If you got this notice from New York State and you looked it up and it said you didn't get anything, you wouldn't worry. But if you got the notice from New York State, you went to the website and it said you got unemployment and you didn't get it, that's the fraud. Because people were collecting fraudulent unemployment that you didn't get, and so you have to clarify it with New York State. And so they would do what, Chris?
There's the website right on the New York State letter you have to go to, and you fill out your social, your date of birth, your address, and say, I never collected unemployment. They investigate it and then would create a new 1099. I know the few people I had this week, we tried to get into their New York State website for unemployment, and it says your password doesn't match.
Probably because they had
somebody-
fraudulently done
Yep.
it. Yeah.
Yep. So
But I will tell you, if you're somebody that did collect on New York State unemployment, they don't send you the form. It's nice that they're at least sending out these email blasts. You have to go in to the portal where you signed up if you did it electronically, or if you did it over the phone, there's an 888 number to call, and you ask them to send it to your house, the 1099-G.
Right.
Okay. All right. And then what else we got here? We got explain the bad debt, right?
Yep. Can you explain the criteria for a bad debt? I invested $10,000 for a friend for a business that failed. He died last year. Can I deduct it?
So that, first of all, the first thing the IRS would look at when you gave $10,000 for a friend was it a bona fide bad debt? Was it really did you really loan the money with the expectation to get it back? Were you charging interest? Did you sign the paperwork? Why didn't you ever take your friend to court before he passed away, right?
Yep.
So those are things that you'd have to prove. And many times it's flimsy. You don't get the debt because really it was the gift. They'll look at it as a gift. But if it was a bona fide bad debt where you wrote out the paperwork, he signed it, you were charging them interest, and he said to you last year, I'm trying to reorganize my business, and maybe you had your attorney write him letters, then you could have a bona fide bad debt.
Right. But if you were a shareholder, it would be totally different because the bad debt, you're limited to $3,000
Right.
a year. A shareholder could possibly be 1244 stock and be able to write the whole thing off.
Right. And that's the thing. Many times when somebody approaches you to loan them money, there might be a better way to do it rather than just loaning them money. It's in that case, it would have been better for them to say, "Here, why don't you become a shareholder in the company?" But then again, then that opens up another can of
Yep.
worms, right? Okay, what else we got here?
Is mileage for routine dental eye primary care reimbursable from an HSA? We live in the southern tier and travel up to 60 miles for these visits. Thank you. I would say no, because you don't have a receipt.
Right, and you don't have a person to, the Texaco station is not going to give it to you for proof of your medical expense.
Yep.
So, yeah, I don't think so.
I don't
And an
think so
HSA is a health savings account,
Yep.
right? All right, let's go to the phones. We're going to talk to Paul, who's been waiting. Thank you for waiting, Paul. How can we help you?
Hey, hi. How you guys doing?
Good.
Good.
Question. Hey, quick question. I go through one of your services, Jack over at the Cheektowaga office.
Thank you. He's a wonderful guy, isn't he?
Great guy. He does mine with my wife, my daughters, and my father's. Now, last year, that's why I bring up my father last. When they submitted everything, it kept kicking back. The IRS says that he has passed away. So,
But your dad thinks he's alive, right?
yeah, and he's collecting the Social Security, so Social Security knows what they're doing, but IRS doesn't. But the quick question, with everything going on, I submitted the forms, his ID showing that he's alive, all that kind of baloney, and I haven't received anything back from the IRS. When you call the number listed on the form, of course, you don't get anybody. Wait 180 days. So should I do his taxes this year regardless and see if they go through, or
Well, I have to tell you, we have a practitioner hotline to go through, and I think probably we still have some time to do this during the week here. And if what I'd suggest you do is call us, and then what we'll do is we'll go through the practitioner hotline. And so what happens is it kind of get bumped upstairs, and what they do is a specialist at the IRS looks at your particular case for your dad, because many times it's just sitting in a mail pile. They still haven't processed millions of tax returns from 2020 because of the same problem that we're all having. Nobody really wants to work. It's better to stay home on unemployment, And so you'll get somebody that you can talk to who will look into your dad's situation. Then we'll know what to do, and they'll tell us what to do.
Right, and you got to have Dad by you when we call.
Because we need, they won't just believe it's you. Your dad. We got to have your dad there.
okay.
Okay?
So I should.
So call Tiffany, Paul, at 632-7886, and then she'll schedule a time to go into the practitioner hotline.
Okay. Well,
All right.
thank you very much.
All right. Thanks,
Great
Paul.
day.
Thanks for calling. It's really a problem because you feel bad for the people at the IRS. They haven't opened the mail. And that just goes back to the whole thing about don't do your return by paper.
Right.
It's against the law, number one. And number two, they don't look at it.
Yeah. It's, somebody, I just want to mail these in. No, you don't. You got a year because you'll wait a year for your refund.
If that.
Yeah.
I mean, here we are, second tax season, and, I had a lady the other day that called and said that her refund went into the wrong bank account. They retrieved it, sent it back to the IRS, and that was in May. And here it is, January, and they told her 80 days ago it'd be 50 days. And so I called the practitioner hotline, and the guy goes, all right, we're putting through, it must have fallen through the cracks. In 50 days, she'll have her money. And I said, okay. But at least she felt better about knowing that somebody looked at her case.
Yep.
I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930, and we're going to go to John. Hey, John.
Hi, Esther.
What's happening?
I have a traditional IRA, mostly in equities.
Mm-hmm.
And when I sold some stock, I had a capital gain.
Mm-hmm.
Is that taxable?
No, because it's all inside of your IRA.
Right. that's what I figured. And once I take it out, then it would become taxable
That's exactly right.
on a traditional.
You are right. Even on a Roth. If it was a Roth, it really doesn't make any difference.
Right. Okay. Thanks.
Hey, John, thanks for waiting.
Yeah.
All right, bye-bye. Yeah, that everything inside of your IRA, that's why a lot of times people will get annuities, which is kind of like weird because they got an annuity in their IRA and the annuity kind of is tax sheltered anyway.
Yeah.
So it's like a tax sheltered
In a
shelter.
tax shelter.
Right. I had a couple the other day that said that they wanted to transfer over $180,000 out of their traditional IRA to their Roth. And, you know, I said it's going to cost you like $50,000, $60,000 in taxes. And that's what they wanted to do.
Some people just
they,
don't.
you know, I just said, how do you know what it's going to be? How do you know you're going to be alive in 10 years? I mean, how do you know that before you take it out that what the tax code's going to be? How do we know there's going to be
And
in
do
the
they
United
have
States?
$60,000 laying around to pay the
Well,
IRS?
actually, they did. You
Well,
know, they were
good for them.
they were well healed. Okay, let's go to Mike in Wheatfield. Hi, Mike? How can we help you?
Hello.
Hey.
What documentation do people need to bring in for your preparer so they can determine whether or not someone qualifies for this new property tax deduction?
Well, very simply, take a look at your. Do you have any income at all, Mike?
Yes.
Like, how much is your income?
Well, my wife and I.
Just a thumbnail. I mean, close. 50,000, 40,000,
30.
30,000. So 6% of 30,000 is 1,800. How much are your property taxes?
Your school and county.
Oh, that's what my question. That includes school and
Yeah.
tax too.
Yeah.
And that's for what year? That would be for
last year, 2021.
For 2021. Yeah, I would have to go back and look.
But let's say your property taxes are 6,000, and 6% is 1,800. You certainly qualify.
So
all we would need when you come in is to bring your county bill and your tax
But
bill.
even if you don't bring your bill, we'd look it up.
we can find it.
Yeah,
online.
we'd look it up.
Well, it's probably easier if we brought the bill. But this is for. It'd be the same. It doesn't go back a year, right?
It's 2021.
2021.
Right.
Okay, thank you.
Thank you, Mike. I mean, you know, like there was a time, like this week, I was like doing them and doing the 229s, right? And then every once in a while, you get somebody that doesn't qualify, or you get somebody that's the credit is 190, and you got to have 250 to get it.
Right.
Okay, let's go back to the phones. We're going to talk to Dave. Hi, Dave.
Hey, Esther. Hi. I just heard it in passing. I had two questions, but I just heard this in passing. Did you say it's illegal to send in a paper return?
Yeah.
For the Fed and the state?
Uh-huh. Okay, and I'm going to use the word illegal in a very, I mean, they're not going to come, oh, let's go get Dave, you know. But for us, they charge us a penalty if we frivolously file a paper return.
But if I do it, it's okay or no?
Well, it's
if
really
you
not
did
okay.
your own taxes.
Right.
I mean, the thing is, it could take a year to a year and a half for them to process it.
Right. I mean, are they going to come and put you in the pokey? No, but it's really, in New York State, they make us certify that we will not do a paper return.
Well, usually I wouldn't care because they don't have any withholding that I'm waiting for them to give me back. But that leads me to my second question. The $250 to $350 on the property tax, that's a refundable credit?
Yes. And if you do a paper, you should not do a paper return.
Okay, so I have to do an electronic for state, so I should learn how to do it for the federal.
You should, really, Mike, really. Come on, step into the sunshine here, my man. Okay?
I like the old paper way.
I know. A lot of people do.
That way.
I know. I did a lot of tax returns that way, but really, that's what they want because they think about it from their perspective. Every time they have to hand process a paper return, it costs so much money because of the personnel. With the electronics, it's like a hot knife through butter. Jump.
Well, they still got Obama's 18,000 extra people to process all those returns. Though.
Oh, we shall not go there. We shall not go there.
Well, I just did.
I know. Hey, thanks for calling. Bye-bye. Okay, what do we got, Chris?
Oh, this is an interesting text. I
Yeah.
don't know what they're saying, but you are wrong. People have become overwhelmed with the complexity and intimidation, and they give up and just pay the bill because they don't know how to fight the system.
I agree. I agree that it is. You think it's easy for us?
I know.
I mean, I want to
Every
tell
year
you,
is
Chris
different.
and I, and Tiffany and all of our senior staff, we bang our head against the wall all the time. But just this is what we have to go. There's so many things in this world that I am not in favor of, and the complexity of the tax return is very, very complex. But my job is to make sure that if I can save you a buck, I will save you a buck.
And that's why we always say, too, if you get a letter, don't just pay it.
Right.
Bring it in. Let us take a look at it because we know what to look
Right.
at and see if they're right.
And it is true, we are a business that charges to prepare a return, but we do lots of stuff for free.
Yep.
And because we think that if you take care of people, people take care of you.
Yep.
Right? All right, let's go to the phones. We're going to talk to Mark. Hey, Mark.
Hi. I have a quick question for you, Esther, about a 401k.
Yeah.
It's a small one. It's only like $7,000 or $8,000. But I'm 63 years old, and I was supposed to have been taking out of it
No,
57 and a half. No.
no, at 72.
Oh, 72.
Right, you're rushing it, Mark.
Well, somebody told me it was 59 or 50
At 59 and a half, you can take it out without a 10% penalty.
without a 10%.
Right, but they make you start withdrawing. Your required minimum distribution is in the year you turn 72, and they even push that off up till April the 1st of the next year if you want to double dip the year after.
Okay. So I can hit a little bit if I want to, but I don't have to.
That's exactly right.
Well, thank you very much.
You're very welcome.
As usual.
Thank you.
Bye.
Okay, did we take a break?
No.
Hey, we got to take a short break. 8030930, 8030930, star 930 on a cell phone. We're going to take a short break, and we'll be back on the other side. Hey, everybody, this is the tax lady from EG Tax. If you have questions during the week and we're not on the radio, you can always, by the way, we have a podcast.
We do. We stream it every Tuesday or Thursday. It's right through our website. You can grab it there.
Right.
You can look where people also find podcasts. You can Google
the podcast where you download your podcast.
Yeah,
I don't even know where people download their podcast. But anyway, but during the week, if you want to go to our website, Ask the Tax Lady, we certainly will help you as well.
I know. I want to say, kind of sad. For the last 4 months, coming into the fourth segment of the show, we always did the Bills Make Me Want to Shout. Kind of sad that they lost last weekend. But I thought Frank was going to surprise us and going to play Me and the Buffalo Sabres. Yeah, yeah, yeah.
Listen, with the way the Sabres are going right now, we don't need to be acknowledging them.
Okay. Yeah, well, I was so bad last Sunday night, I locked myself in the bathroom with the fan going so I couldn't hear the TV. And I was hoping that, because 13 seconds, I thought, I'm just not going to watch this. And so I waited like 4 minutes, and I came out, and they were still 13 seconds.
Oh.
I thought, my God, 13 seconds is really 12 hours. Well, anyway, but okay. We're going to go back to the phones, and do we have anything? No, not there.
No.
Right? Okay. We're going to go talk to Mike. Hi, Mike. How can we help you, sir?
How you doing? Real quick question. When you did mention the property taxes, you said school, county. What about city? Does that get?
Yeah, school. All of your real property taxes. If you're in an area with school, county, and city, yes.
Yeah, the only thing that doesn't count is like a refuse. If you're in the city of Buffalo, your garbage tax doesn't count.
Or a lot, let's say you have a lot attached to your house. The lot taxes wouldn't count.
Okay, and that's strictly got to be on the property you own. Nothing.
Right, your personal
You own
place
and
where
you
you
live.
live.
Right. Okay, thanks.
Okay, thanks, Mike. And then we're going to go to Nick. Yes, what?
We do got a text.
Okay.
It says, hi, how much money can you put in a traditional IRA before you no longer get a tax benefit? My husband and I both contribute to a 401 and a 403.
Well, if you got taxable income, and you want to whittle it down, and you qualify because you have qualified plans at work to put up to depending upon your age, up to $7,000 in your IRA. If you guys did $10,000, for instance, and you're in the 12% bracket, you'd save $1,200 federal taxes and like maybe $400 New York state taxes. So that would be a good thing. And many times when you're reducing that adjusted gross income, it increases what's brand new this year is the earned income credit.
Right.
So you'd be surprised the angles you can come up with, and you might qualify for the pension savers credit. So there's all kinds of angles that you can work out.
Yeah, I know. I tell my clients who have pension plans at work, wait till you come see me before
you make the decision.
Yep.
Yeah, because I'll sit there and I'll say, how would you like an extra $2,000? And they go, yes, I would. Then let's take part of this refund and put it in an IRA,
Yep.
right? And let's go back to Nick. Hi, Nick. How can we help you, sir?
Hi, I just bought a piece of equipment here. I work at an optical, so I bought a piece of equipment to cut eyewear, and was told that it was tax exempt. Even though I'm not tax exempt, I do a 1099 because I make the product, and according to them, that is tax exempt.
All right, they don't mean income tax exempt. They mean sales tax exempt.
Oh, okay. Right.
So that's what they're talking about because that's used in the production of something that would ultimately be subject to sales tax. So many times people are doing capital assets, like they're doing capital improvements in their house, new kitchens, and they call me up and they say, well, I know it's deductible because I told them it was tax exempt. Well, it's tax exempt from a sales tax point of view, but not from an income tax point of view.
No, that's fine. Like I say, I claim it as a 1099. I think I have jacket.
Which is perfect because, Nick, I wanted to talk about 1099s. People that get 1099s for providing a service should put that income on a Schedule C and reduce it by the expenses to make the income like you did right there, Nick. You can take that as an expense. Especially people that are doing daycare, moms and dads and grandmas and grandpas, because if you claim that income for the daycare, let's say your kids are paying you $6,000 and you take all those expenses, the toys, the travel, the meals, part of your home as a deduction, you're going to find out, grandma and grandpa, you don't pay much in taxes, if anything at all, but your kid gets a 50% credit for what they pay you. So it's very important when you are self-employed that you reduce those expenses on a Schedule C, and especially if you're doing daycare, because your kids will make out. What are you looking at, Chris?
A text.
Okay, what does it say?
It says, every year Congress or somebody changes the tax law.
You betcha.
And until cast in stone, it's not told to the public. They rely on the uniformed to maximize on the IRS.
The
scam.
uninformed.
Uninformed, sorry.
Right, to maximize. Well, I'm going to tell you, like what they just did with the tax law this time. Let's face it, like my commercial says, what other industry do you know that they change the law every year, sometimes every month, sometimes every week? Last year when they made unemployment tax-free up to $10,200 in the middle of the tax season when we had already made it taxable. That's the way it is. That's what happens with Congress. And when you have a Congress that is maybe not getting along so good, and one side is trying to get brownie points on the other, and maybe they're not thinking about fiscal responsibility,
and I know
anything can happen. But our job is to make sure that we have you not pay taxes if that's the way the law
and I know
works.
we try to talk about them as they come out as
To let you know.
projected tax changes, so you're starting to become aware.
Like last fall, I swear they were going to make the tax rates go up, and they were going to increase the tax rate that C Corps pay. By the way, if you have a C Corp and you're paying at a flat rate of 21%, many of you, if not most of you, should move to an 1120S because you'd pay a lot less in taxes, And one problem we did in tax school, what was it, $10,000, $12,000 that they paid less by moving to an S corporation? Anyway, if you're somebody that is out there and you're living and breathing this year, before you assume you don't pay taxes, especially if you're a senior that's working part-time and you haven't had to file a tax return in a long time, this year you could probably get an earned income credit and the property tax credit.
Or if you know somebody who's a mom or a dad that has children and they don't file because they don't work, they want to file this year to get the child tax
and
credit.
it's a lot of money.
Yep.
A lot. I mean, we're talking tens of thousands of dollars.
Exactly.
And to me, that's a lot of money to me.
A lot of bread.
A lot of bread. I'm Esther Gulias, the tax lady from EG Tax. Our website is egtax.com. We have 31 area offices to serve you. We're down in Florida. We're down in Arizona. We love you. We want to help you if you're getting letters, if you're confused, if you get your first go around. And a little girl this morning, her refund was supposed to be $450. When I got done with her, she got $4,000. I mean, you want to make sure somebody knows what the heck they're doing that is doing your return. Until next week, I'm Esther Gulias with Christopher Fabian. Hey, thanks for listening. Bye-bye.